Welcome to ForexTV.com. Today is Thursday, May 1st. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade, the U.S. dollar is extending session gains against the majors. Liquidity is thin with holidays in the European as well as the Asian markets. U.S. equities are rallying with the major indexes up in positive territory after sliding late in the previous session. And in a U.S. data-heavy week, today's ISM Manufacturing Index came in at 48.6 in April, unchanged from March. Meanwhile, personal spending increased by more than expected in March. Personal spending was up 0.4% month over month, and personal incomes up 0.3% month over month. Core PCE prices also rose 2.1% year over year. And in initial jobless claims, the data rose more than expected by 35,000 to 380,000 in the latest week. This afternoon, I'm joined by Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Hello, Remy.
Thanks for joining us today.
Happy to be here, of course.
Well, the U.S. dollar is higher against the majors in the North American session, and the FOMC yesterday reduced both the Fed funds rate and the discount rate by 25 basis points. Now, we do have non-farm payrolls on tap Friday morning at 8:30 a.m. Eastern. So let's start out with a look at the euro dollar. Greg, the pair has fallen below the 155 level, but technically, do you think this is a correction, and how much downside do you see? And while we're at it, if you could give us your levels.
Sure. Well, you know, reviewing what the euro has done since probably the last time we spoke, it broke through the 160 level for a day, you know, and then came back down. There was a lot of anticipation at that level, and instead of it scooting forward like it did when it broke the 150 level, it scooted forward about 20 pips and then came back down. So it was quite a disappointment on that side, and things started to turn around a little bit for the dollar around that time, and we broke through some chart levels. You know, 21-day moving average was the first level, and then we started to get a little more weaker data out of the euro area. This week, in particular, the German inflation for the month came out much weaker than expected at around 2.6, when they're expecting, you know, somewhere north of 3%. And the flash estimate for the euro CPI came out a couple tenths lower than what they were expecting as well. So, you know, the idea that perhaps maybe it's a euro thing, and the euro is going to get a little weaker, and you know, sort of lead the way in that currency pair. So we have corrected, as you say, and we're down in the 155 area, 154, 36, 38 right now. How far can we go? We have the 38.2% retracement of the move up from December up until the high, you know, at 160. That comes in at 153.71. I'm sort of targeting that level as a first stop. The next level below that is 151.59. I would not be surprised if we, you know, eventually move our way down to those levels. We are seeing more flow as far as the sell side goes, and the market is seeing you know, more longer term systems coming in from the short side. So, you know, we could head down to those levels. Of course, we have the unemployment, which is going to get in the way tomorrow, and we'll see how the market reacts off of that number before we, you know, you know, we'll probably see a little bit correction because of a weak unemployment tomorrow. But I think maybe the intermediate term trend might be a little bit to the downside as we correct down toward the 150.5 level, and then we'll see what happens.
Well, Greg, you touched on some of the key fundamentals weighing on the U.S. currency, and given what we're seeing in the broader equity market, let's shift over to the Japanese yen. Dollar yen has triggered stops on the rally in the U.S. equity market, and euro yen is also extending gains. So, ahead of the final trading day of the week, if you could give us your forecast for the Japanese yen.
It kind of moves along with the stock market as usual. You know, we have if the stock market finds a bid, then it tends to go up, and if it doesn't, then it tends to go down. So we're sort of, but from a technical level, we're in a daily chart. We're in an up channel right at the moment. It's not really moving gangbusters to the upside, just a slow sort of higher highs and higher lows type formation. So I do see some resistance at the 105.70 level. That's sort of my target on the upside, and on the downside, we have support on the trend line at 103.22. I think we sort of maintain this trading in the range for the time being in that currency pair, and because it is influenced a lot by the stock markets, and the stock markets, as we know, are they're not in the trending mode, certainly to the upside. So when you have a bearish / sideways stock market, you're going to get up and down movements, and so I expect that to happen. That to dictate the moves in the dollar yen at the moment.
Okay, and now let's shift our focus over to the Aussie as well as Kiwi dollars. For Aussie against the U.S., currency price action has moved about 300 basis points in recent sessions. So what's your strategy for the Aussie dollar as well as the Kiwi against the U.S. currency?
Right, those currencies, they obviously are the high-yielding ones, and so they get a lot of play from the carry trade people or the risk-averse people. And when they see the market's less risky, they tend to pile into the Aussie dollar, and they pile into the Kiwi. Now, from a fundamental standpoint, we are getting some weaker statistics that are coming out of those centers, in particular New Zealand. They're in the middle of a drought. They're an agricultural and commodity-driven economy. They rely on exports. 30% of their economy is exports. They also rely on tourists, and a high New Zealand dollar is going to make it expensive for tourists to go over, and it also raises the cost of their exports abroad. And the drought is they're big into dairy and milking cows, and lately they've had to kill off their cows and slaughter the cows only because during drought conditions the cows don't produce milk. So instead of producing milk, they're producing beef, and that's only temporary. So once the cows are gone, they're gone. So this isn't a good situation for their economy over there, and so we're seeing some weakness, and this may if we get a break in some of the commodity prices, and we're seeing oil down and gold down and some of the commodities down, we may see that the New Zealand, who has the rates at 8.25, start to ease rates a little bit earlier than expected, and that should cause some liquidation in the New Zealand against the dollar, and New Zealand against some of the other carry currencies like the yen and so on and so forth. So the same with Australia, although they're a little bit more mining economy, so and they're still getting support from exports of raw materials to China and such. But they like the euro, it broke the 95 level, and basically for a day, and then came back down. And every time we talk, it seems like it's the same story over and over again. Is it going to be able to move higher? And so far it hasn't. It's testing the 21-day moving average. Trend line comes in at 92.57. I'm watching that level on the downside. Now that we failed on the upside. So one of these days it may break. One of these days it may break lower, and one of these days it may break higher. I don't know which way, but I'm sort of favoring the downside only because the economies seem to be slowing down as a result of the higher rates.
Okay, Greg, last but not least, before we wrap it up, let's take a look at the pound against both the U.S. currency as well as the euro. So fundamentally and technically, what's your recommendation for the U.K. currency?
Right. Against the dollar, we've had some volatile moves over the last few days, I guess. I think I sent you a chart going back to the 25th, an hourly chart, and it goes up one day, comes down the next day, up the next day, down the next day. Just moving all around in a fairly I guess a 196 to 199 range. So there's plenty of opportunities to get on the wrong side. There's plenty of opportunities to get on the right side if you're geared toward buying dips and selling the rallies. But it makes trading a little bit more difficult in that currency. Overall, though, at the moment we broke below the what I look at on a shorter term chart, an hourly chart, the 100 and 200 hour moving average today, and that came in at about 198.20. I'm using that as my stop on the top side. I think we might probably head lower in the pound sterling, maybe go head down eventually to the 190 area, but that's going to take some time, and it's going to take some cooperation, I guess, from the UK economy to show weakness, and also we're going to probably have to see inflation come down in that economy over there as well. So I'm sort of betting that maybe the commodities start coming down, and the price of oil starts coming down, and this will open up the doors for easings to help those the UK economy along, especially in the housing sector. So now the euro versus sterling. That cross that has been also sort of topped out at the 80 level, and it's been slowly moving down lately as the idea that the euro might start to have more favorable inflation, and so it just seems expensive at the 80 level at this moment. I don't think the market's ready for any sort of move up. It's come up a long way. That currency pair has been trending, and maybe it's time that it just moves the other way. So really against the euro, probably see some strength against the euro, with the euro sterling heading down a little bit, but against the dollar, I'm sort of looking for the pound sterling against the U.S. dollar to head down. So it's kind of a mixed picture for that currency.
Okay, Greg, thank you very much for joining us this afternoon, and thank you very much for insight and analysis.
Thanks for having me.
This has been your Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.